Good evening, good afternoon, and good morning to all. I'm Steve Orleans, the president of the National Committee on U.S.-China Relations, and am pleased to welcome audiences from 78 partner organizations in the United States and 4 partners in China, as well as individuals from around the world to the National Committee's 14th annual China Town Hall. Today's program comes at a critical time in U.S.-China relations. With the election of a new president, both countries have the ability to improve the relationship for the benefit of both peoples. Sino-American relations has a profound impact on communities across our country. So we hope that the issues raised during our program today will spark an educated and lively discussion at your local town hall conversations. In view of the importance of these issues to the future of America, the National Committee has adapted the format of China Town Hall this year, expanding from a single night into a multi-night series of programming to address the range of issues confronting the relationship. After tonight's keynote, we will host subsequent evenings on economics and trade, climate and health, and society and culture. In addition, a 5th Mandarin language event will be held for our Chinese-speaking audiences in the United States, China, and around the world. We hope you can join us for those nights as well. Information can be found on our website at ncuscr.org/CTH. As the president-elect formulates policies towards China and the rest of the world, we need to have a full and frank discussion of where American interests lie. So we are thrilled to welcome Ray Dalio as keynote speaker at China Town Hall. Ray is the founder, co-chief investment officer, and co-chairman of Bridgewater Associates, the largest hedge fund in the world. He's the author of New York Times bestseller, Principles, Life and Work, and the upcoming The Changing World Order, Why Nations Succeed and Fail, which I just had the pleasure of completing and is a must-read and will be released this winter. With over 35 years of business, personal, and philanthropic engagement with China, he offers special insights into China and U.S.-China relations. I'd like to thank our partners at all 82 venues across the United States and China who have transitioned seamlessly in this virtual world to bring this year's China Town Hall conversation to their local communities. Let me thank our speakers, a veritable who's who of U.S.-China relations. We also want to thank the Henry Luce Foundation for their support in funding China Town Hall. Finally, let me thank our dedicated staff at the National Committee for putting this program together. Thanks to all who have submitted questions in advance and throughout the webcast. We encourage you to join the conversation on social media using the hashtag CTH2020 and tagging @NCUSCR. Without any further ado, I'd like to turn it over to Ray Dalio for his keynote remarks. Ray?
Well, thank you, Steve, for inviting me to share my thoughts with you and others during this most remarkable time for China, for the United States, and for our relationship. Before describing what this time looks like to me, I would like to share with you a bit of my background, which affects my biases, maybe. My perspective is influenced by being a global macro investor for over 50 years and having a lot of contact with Chinese economy, its markets, and its senior policymakers who are responsible for the economy and the markets. In my job, I've followed all major economies over those 50 years, looking at the big drivers of their economic performances to bet on how well these countries and their markets would do. In 1984, I was first invited to China by CITIC, which was the only window company at the time. I mean, basically that meant that it was closed to the rest of the world. And CITIC, which was formed by a capitalist, first capitalist, Deng Xiaoping appointed him, was allowed to look at the outside world and learn from it. And so I was invited to teach them about the financial markets. That began the relationship. 5 years later, in 1989, my friends at CITIC introduced me to 7 young, great people who were called the Securities Exchange Executive Council, which was a group of 7 people, which was put together for the purpose of making the first stock market in China since after liberation. And there was no money then, really, and they were in a dingy hotel, and these great people made the first stock market. And my relations continued, and along the way, I had contact with all sorts of people, including very common people, because my son went to an all-Chinese school there when he was 11, and eventually formed and ran a foundation for 12 years that helped special needs orphans in China. And that brought me to all sorts of China and all sorts of people in China. And that affected my perspective of China. In the 36 years since I first went to China, I've seen China's per capita incomes increase by 25 times, life expectancy increased by an average of 10 years, and the average number of years of education increased by about 80%. I saw capitalism develop and flourish, and the capital markets develop and open up. I saw how the Chinese stock and bond markets became the second largest in the world. I saw how close these things, I saw up close how these things happen. I also saw how China became much more welcoming to foreign investors. For example, while in 2015, only 1% of the markets in China were accessible to foreign investors, now over 60% are available to them. Because investing is a matter of finding relative attractiveness, I make comparisons, and comparisons are important. And simultaneously with my watching China evolve, I watched the United States evolve in ways that concern me. For example, the creating of a lot of debt and the printing of a lot of money, which in history was a threat to reserve currencies. And that prompted me to study the rises and declines of reserve currency empires over the last 500 years. The chart I'm showing you here goes back 500 years, and it shows the major empires during that time. This is an aggregate measure of power made up of 8 other measures I'll explain in a second. But the blue line is the US and the red line is China. I think it pretty much speaks for itself in terms of that progression of Chinese power in many ways. That power index is made up of 8 gauges of powers, which have been shown to be the most important. These are the powers of education, innovation and technology, competitiveness in world markets, share of world trade, economic output, military, and the strength of the financial sector and the reserve currency. This next slide shows each of these power indices for the United States and China. They pretty much speak for themselves. I won't take you through them. We don't have time, but you get the idea. But I would like to draw your attention to the 2 that are lagging the other measures of power in China. They are the power of the reserve currency and the power of the financial markets and the financial sector. These powers traditionally lag other powers, but inevitably catch up. In studying history, I saw that all leading trading empires over the last 500 years had the world's reserve currency and the world's financial centers. During the 1600s and the 1700s, the Dutch guilder became the world's reserve currency, and Amsterdam became the world's financial center after what we now call Holland became the world's largest trading country. In the 1700s and the 1800s, the British pound became the world's reserve currency, and London became the world's financial center. And after the British Empire became the world's largest trading country. And in the 20th century, up until now, the United States dollar became the world's reserve currency, and New York became the world's financial center after the US became the world's largest trading country. China is now the world's largest trading country. I believe China is now evolving into that role. Even though China's shares of world trade and world GDP are comparable to the United States' share, the renminbi is less than 2% of global reserves, world trade invoicing, and cross-border lending. In contrast, the US dollar accounts for over 50% of global reserves and trade invoicing, and is around 60% of cross-border lending. I expect that to change as China moves to internationalize the renminbi and open up its capital account. China's capital markets are opening up to foreigners and non-Chinese investors who are underweighted in them. For example, though China accounts for now roughly 15% of world equity markets capitalization, it counts only for a couple of percent of global investors' portfolios. So I believe that this is a very special moment because simultaneously there will be the confluence of the rapid development of the Chinese capital markets, the opening up of these markets to foreign investors, the relative attractiveness of them, and the underweightedness of global investors in them. And this is happening when the fundamentals are undermining the US dollars. I believe that these developments are likely to lead to capital and knowledge inflows into China, and that will benefit the Chinese capital markets and more broadly benefit foreign investors and Chinese investors too. Because of how I see things and the contact there, I've been a chronic bull on China. People have accused me of being biased, naive, and in some cases unpatriotic. I think I'm just being objective. Maybe I'm missing some important things that this extremely well-informed audience can help me see. So I'm looking forward to our conversation, Steve.
That is a fabulous introduction and basically a statement about why your book is a must-read, because it really goes into a lot of those concepts in great detail. So it's fair to summarize to say that you're looking at America in relative decline versus China, and China at relative ascent. Is there something that the United States can or should do to kind of prevent that relative decline?
Well, it all comes back to those 8 basics, but let's put it into basics. You have all individuals, companies, and governments at the end of the day have to earn more than they spend, and they have to have a solid balance sheet of assets which are greater than liabilities. And you could see reverberate through the economy with this shock. Those who have those things are in good shape, and those who don't are in bad shape. That's true whether or not you print your currency or not. So what that means is you have to have either be able to be more productive, because we're running deficits in these regards, and now we're funding with debt which we're printing. Or so you have to raise your incomes, or you have to cut your expenditures. We're lucky to have the exorbitant privilege of the reserve currency, which allows us to do that, but we're testing the limits of that. The other things that successful empires have done over there is they have excellent broad education, and not education just in terms of subject matter, but the teaching of civility, of how people should be with each other. And by and large, they work in ways that can be competitive and inventive, but they're rowing in the same direction. And they're, as a result of that, pursuing the same missions, and they have a common dream. You know, we called it the American dream, let's say. I think we need an American dream, a dream of what are we going after that we can agree. I thought it was equal opportunity. I would believe in equal opportunity might be a good thing. But anyway, you have to have a common dream. You have to have metrics behind that common dream. And then you have to be pursuing it together. Those through history have been, the most key elements of countries' successes.
The reserve currency question. You have 50% of reserves held in dollars, 2% held in renminbi. It's much more than global trade. It's confidence in the currency. Since the renminbi is not truly convertible, what's going to happen in the future that's going to convince those that are holding reserves to be holding RMB?
Well, traditionally, you could see that there's the development of the RMB. By the way, I think it'll evolve over decades, but I think it'll evolve pretty quickly. There is the loss of confidence in the reserve currency, which drives people to see alternative storeholds of wealth. So, for example, when there's a debt issue, there are two ways of dealing with debt. There's hard money, traditionally backed by gold. And when that happened, then there was breakdowns in that monetary system, the valuation. So for example, classically, March 1933, Roosevelt, with the debt problem, was forced to go off the gold standard, printed a lot of money, devalued the dollar, and then it moved on. In 1971, we had the same. Nixon did the same thing, went off the gold standard, and devalued, and so on. And the creation of a lot of debt and money means that money goes someplace else, and it traditionally, both of those cases, it went into stocks, gold, and other places. So money is always the holders of money, which are the holders of bonds. Bonds are a promise to receive money, a lot of money over a period of time. It's a very long money position. And when those become unattractive, such as now, let's say, you get zero interest rate or close to zero interest rate or even a negative interest rate. And there's a lot of creation of debt and a lot of printing of money. That drives that into other assets. They may not be another currency if there's not a good currency. They may be stocks, they may be gold, and they may be another currency. But it is that kind of time that we're in. So next year and the year after, no matter what, we're going to have large deficits. We are going to produce a lot of debt, and we will monetize that debt, and that debt will have a negative real return, and therefore people will borrow in it, will find it more advantageous to borrow in it than own it, and then they will move to other assets. So that is one ingredient that's happening now, at the same time as another number of ingredients, the opening up of the
Don't we need convertibility? Don't we need convertibility in RMB?
No, you don't need capital flows. You don't need total convertibility.
How can you have confidence if you're sitting in a central bank in Japan or the EU or anywhere else, if it's not ultimately convertible? You have an obligation to your people.
No. The convertibility, it depends on the nature of the convertibility, right? The capital account, by the way, is going to be opened. You're seeing now an opening up of the capital account. You will see. And you will also see more internationalization of the renminbi. But today, I'm an investor in Chinese capital markets. For the last couple of years, it's been, and I can safely bring my money in and out. And I have to, in making those decisions, decide what the relative risks are of one type of risk versus another type of risk. Any country, including the United States, can establish capital controls. And there's a risk that countries take.
China does have capital controls. One is theoretical, one is actual.
But the degree of capital controls, as an investor who brings international money in and out of there, some onshore, some linked because of the links that they've created in Hong Kong for Hong Kong markets and so on, I can get in various ways those types of exposures, both onshore and offshore, in a way that allows me to put my money in and take my money out. I can do that. So it's not an impediment. As a professional investor who's doing this, I can guarantee you it's not an impediment. And so in making those choices, now I recognize that at any time that could be closed and you might have issues and so on, just like I recognize, it's a risk here, but one has to weigh those risks, because in weighing those risks, to be absent the Chinese capital markets is very risky. Because if you're looking at this almost as being, think of it just as diversification. There's the United States and there's China. And basically those are the two big economies. If you're dealing with industries of the future, technology, and so on, to be heavily weighted, entirely weighted almost, in the countries that are the older, the reserve currency countries, the United States, Europe and Japan, and you look at those older, more indebted countries that are having problems with monetary policy because they have to produce a lot of debt and produce a lot of money to do that. And then to not be in China is, to me, in my opinion, risky. So I feel that I have to have a diversification, and I compare those risks. So none of the risks are zero. It's just a matter of assessing that. And I can tell you, that market, that foreign investors are moving in, and the Chinese are doing things to build confidence. They can undermine it, but I think that the diversification benefits outweigh the risks.
Did the delay of the Ant IPO affect that whole concept?
No, it's such a good example that Westerners, I think, are like on their edges of the seats, and they pay so much attention to the one development. We're almost like news-hungry people. What's today's development? And they don't pay attention to the evolution. I've had a lot of dealings with Chinese financial regulators. And I could say that generally speaking, no, not generally speaking, almost always speaking, I found them to be reasonable, caring, and highly informed people who are now in an environment which is changing at an extremely fast pace. And that there's a risk of being too loose or too tight, particularly on new types of investment. The Ant is a whole new concept, innovative concept, in terms of banking, and almost could replace or threaten the banking system in China. And it hasn't yet been properly established in terms of regulatory review and the like. And so that's an element. And of course, it's important to be clear that what we have in China is state capitalism. So state is going to control those things. But I've watched in the United States, in terms of regulatory authorities, struggle to try to get the balance between freedom of what is being done and restrictions on what is being done right. We had the financial crisis in the United States because they were too liberal in terms of controlling some of the things that were being done. There's always a wrestling match on that. And then I think Ant got ahead of that. It's up to one to interpret that. But anyway, it's the regulatory authorities to decide that. And then, so I think it was progressing too fast. And it had to be clear as to who the authority was.
At one point in my life, I was an investment banker who did IPOs. If 3 days before an IPO, the deal was pulled, wow, that probably would have been the end of my career at that point. It's quite you were not in good contact with the regulators if that happened.
China is not the same. We can't judge China by the same exact standards in the same ways. And I think that people could make the mistake of mistaking imperfections for the changes in the directions. So, as I'm saying, if you look at the directions and you look at what's going on, those are the trends and those are the forces about the big things that I think that are going on.
I mean, one could make a strong argument that if you compare the language of the third plenum of the 18th Party Congress, which was in 2013, to the 2 weeks ago, the fifth plenum of the 19th Party Congress, with respect to state participation in the economy, it's really quite starkly different. And a lot of the Chinese miracle that you have witnessed in your 36 years, and I've witnessed in my 41 years in China, is based upon the private sector. And is the miracle going to continue if the state is playing such a major role?
I think it's important to understand, to know the people and to understand the intentions and then interpret the actions in light of those particular intentions. I think a lot of foreigners may misunderstand that the very strong reform policies that we've seen pervasively at an extremely fast pace are also happening at a time when there's not going to be total or unleashed state-owned enterprises, because there's certain benefits. So I see they're wrestling with the question of what should be a state-owned enterprise and what shouldn't be a state-owned enterprise. Is that a strategic enterprise? Should that be a public-private partnership? Should it bring in equity? And so the desire to corporatize or privatize or whatever a lot of state-owned enterprises, and at the same time to keep them also many of them controlled. Let's remember that this is a socialist capitalist economy, and that when matters of employment are entered into there and direction, everything is not a free market society. In the United States, it's almost entirely a free market. That has good and bad things. Sometimes it's difficult to get resources to where the resources should go. Sometimes in education, whatever, in building infrastructure, building roads is a challenge in the United States. There are pros and cons. But in this state capitalist type of system, there will be those types of controls and directions. I think it would be a mistake to say that the privatization, let's call it, of state-owned enterprises in China is not happening the way we capitalists would like, to mistake that to being that China is not producing capitalist type of things like the development of capital markets, the increase in efficiencies. I mean, we could just look at the results. You know, we could look at how that COVID was handled, how their economy is handled, and so on. If we're so hung up on getting it exactly that way, we might miss the bigger things that are going on.
You know, I would argue that the returns on state-owned capital versus private capital are much, much lower, and ultimately they will have to pay a price for that.
But that's up to investors. Have the beauty of being able to decide whether they want to go into or not want to go into those enterprises. But you must agree that there's a plethora of wonderful companies that this year will probably have something like 40% of the IPOs be China in the world, big IPOs, be Chinese companies on Chinese markets. Anyway, a lot of them will be Chinese companies on Chinese markets. And we as investors have to decide whether we want to go to those companies in those markets or not. And so there's a lot there to offer while you might choose to stay clear of the state-owned enterprises if you like.
Great. Well, let's go to our first audience question from Jasmine Fan at BlackRock.
Hello, my name is Jasmine Fan from New York. And my question is, how do you think American investment companies should position themselves in the world of US-China decoupling, but also to consider opportunities in the gradual opening of China's financial market? Thank you.
Thank you for your question. I think the world is changing in very profound ways. And I think that sometimes when we look at it up close, we can miss the big pictures of change. And that it is changing where China is really gaining its stride. And anyway, it will be a competitive power. So I think that investors and investment managers have a responsibility to know China well, be there, and make investments there as they must. I'm a global macro investor, so I have to be in all the major markets and assess those. And I think that diversification and being there and being aware so that you have an intimacy of understanding of what's going on in China and make those choices from that intimate, up close perspective, I think is required.
If you're roughly at 3% now, and you're saying a neutral weighting would be 15%, how long do you think it'll take for international investors to move to that weighting? How many years?
Well, by the way, that 15% is also growing at a fast pace. So I expect the 15% will grow, and I expect that the 15%, so the 15% will grow and the share of that will grow. I would expect, I can't tell you, how fast, but I would say maybe, something in the vicinity of a 30 to 50% growth rate, and that probably more.
Annual.
Yeah.
Yeah. What is central bank digital currency going to play a role in this now that it's begun to be rolled out in China?
Let me explain digital currencies for a second globally. There are two purposes of an exchange rate and of a currency, and that is as a medium of exchange and a storehold of wealth. So there's the digitalizing of the clearing system. No central bank, I believe, is going to allow an alternative currency to gain strength, such as a Bitcoin type of currency and so on. The power of having your own currency and being able to print your own money is an enormous power, and I don't think that you will see anything like that. But the digitalization is not only efficient from a transaction point of view, it helps to minimize the risks of the existing clearing system, which is fairly heavily influenced by the United States. Some of our sanctions, a lot of our sanctions, as you might understand, which probably sanctions are our greatest power, the United States' greatest power, happen by influencing through sanctions, currency movements through the SWIFT clearing system and the like. Digitalization helps to reduce those risks. So that's what's going on with digitalization, and I expect that it'll be successful.
Even though Ali and Tencent already had what was in effect digital payment systems. Again, is this a question of the state participating where the private sector was already in it?
This is the government digitalizing the currency, offering a digitalized version of the currency.
Let's go to the next video question from Corey Cooper, Columbia Law School, Black Voices on Greater China.
Hello, my name is Corey Cooper. I'll be attending the CHINA Town Hall Keynote program with Ray Dalio online. My question has to do with the future of U.S.-China business relations. General Secretary Xi Jinping recently gave a foreign business-friendly speech at the 3rd China International Import Expo. However, given President Trump's propensity for blaming China when questioned about the U.S. economy and the desire of some officials in his administration to demonstrate they're, quote, tough on China, I wonder what your thoughts are on how likely it is that business relations could actually deteriorate rather than improve further between now and January 20th, when Trump officially leaves office. Thank you.
Well, there's the question of the conflicts, and then there's the date. Both are embedded in that question, I think. There are 5 types of conflicts that exist, with a rising power challenging an existing power. They are, and we call them wars. There's a trade war. There's a technology war. There is a geopolitical war. There is a capital war. And then there is a military, let's call it competition, that could conceivably be into a military war. They're all connected, and and because of the threats of those, we are having decoupling taking place, and which means the building of sort of self-sufficiency, and so that is going to be with us for a long time, and how those conflicts are handled will matter a lot. As far as the Trump moves between now and the end of the year regarding any actions with China, I wouldn't expect, my own guess is that there wouldn't be any big developments that would be traumatic or surprising in either side. But I'm not the geopolitical expert who should be offering those comments as well as other people here. But by speaking to many of those, I would say I wouldn't expect between now and January 20th a significant developments in Chinese-American relations pertaining to the things you're asking about.
Yeah, we have to hope not. So there were additional sanctions put on people in Hong Kong last night by Secretary Pompeo. Let's go. You mentioned technology. Let's go to a question on technology from Nick Young in San Francisco.
Hi, everyone. This is Nick Young in San Francisco. As the US-China tech war intensifies, both countries are pursuing separate models of global cyber governance with distinct values and ecosystems. China may have initiated this process when it blocked Facebook, Twitter, and Google more than a decade ago, but now the United States has retaliated by issuing executive orders banning TikTok and WeChat. With no positive turn in sight, what would a technology decoupling look like, and what would be the consequences?
The technology decoupling, of course, there's so many technologies and so many applications, but let's say at the big picture level, it certainly reduces the pace of development, and it puts entities who are trying to juggle both, sort of on edge. It means, in my opinion, it sets back development, particularly in the United States in some ways. In China, let's deal with that privacy issue. It is technologically a fact that the more data you have, and the more artificial intelligence is applied to that data, the better you can understand and manage things. So from a competitive point of view, I think it's a desirable thing to have the kind of massive collection of data. I've heard just different numbers, 8 times as much data per person and so on. And of course, the other side of that is the privacy side. Each person comes down where they want. What is the benefit of that privacy? In China, it's most people view that as something, that absence of privacy is something that brings about better security and a more civil society. In the United States, we value personal privacy issues. I'm not going to get into that, but from an efficiency point of view, it's, contrary to efficiency when those technologies are decoupled. And it also is somewhat of a disadvantage technologically to have more holding of data private than to use it in a broader way.
Raises the question of reciprocity, though, that Facebook, Google, YouTube, Twitter have been blocked in China for a number of years now, and WeChat and TikTok and other Chinese social media apps are able to operate in the United States. How do we resolve that question? In other words, there's a sense, and I heard this a lot from the Trump administration. I oppose the WeChat and TikTok bans in the United States. However, the response from the Trump administration is it's not fair because we can't operate similarly in China.
I think everybody has to look at what the bigger picture. What are the most important things in each country that'll be lines that won't be able to be compromised, and there are different things in different countries. So you're not going to get equal approaches, or for example, the privacy issue and Google and so on developing in China has to do with how information is managed in China, that is managed in a way that's different from how it's managed in the United States. And so reciprocity is not going to be something that you can develop policies on. We're going to have the same reciprocity. You could use them as negotiating. So I think you have to look at what are the most important things in, China. And there's a certain government approach that doesn't have that same free flow of information, particularly foreigners. However, there's an economic component of it too. Some countries are more protectionist in some ways than other countries. So those are matters of, negotiation, but they can't be approached like, that we can demand reciprocity with matters that are not equal. For example, the big issue for the Biden administration is the human rights issue. That issue is going to be then dealt with a sovereignty question in China. China would view a human rights question as a sovereignty question. Should countries operating outside some of this jurisdiction assess and judge and exert pressure on how they should deal with domestic affairs and so on. So how will that work out? There'll probably be a whole lot of arguing about that. And then it'll come down to, who has what power. At the end of the day, this whole thing's going to come down to who has what power. And that's why I think in the United States, the most important thing is focusing on how we can get stronger. But anyway, those issues won't be resolved by expecting, we do it and then they'll do it too.
See, but the problem we have, because we're dealing, obviously I'm dealing with the Congress, dealing hopefully with the new Biden administration, is when there are violations of what are universal values. This isn't a question, that it becomes extremely difficult to persuade the Congress, the American people, that we should even be dealing with them on a lot of these issues. So when you talk about reciprocity, people just go, well, it's just not fair. It's just not fair. We shouldn't be allowing that. And the argument the Chinese make with respect to Facebook, Google, YouTube, Twitter, actually doesn't hold water. It's exactly what you said in the second part. It's protectionist. It's economic protectionism. It's not truly national security. And if China is not willing to enter into discussions on these kinds of issues, it's going to be really tough to get to a constructive relationship?
Well, I think the problem is that different people have different views about what is fair. And in the reality of world affairs is that those interpretations don't matter really much in international relations, maybe unfortunately, but maybe fortunately, because if different people have different views of what's fair, maybe you can't get there. And the only thing that really matters are relative strengths, relative powers, because it's a negotiating thing. And so, it's very interesting in the history. The United States, really starting under Woodrow Wilson, was the first country in history to view that the relationships between countries should be analogous to the relationships that we want to have between people within countries. In other words, he viewed that the United States as a democracy and that the way people should be with each other should be a model for world governance. And that's why he formed the League of Nations, and the League of Nations failed, and the United Nations failed and after it. So there's not a world organization, there's not a world court to adjudicate differences. So, for example, if you say that the world wants, let's say, that human rights issue and so on, I would suppose if the world signed an agreement and agreed by and had enforceability, so that then you could bring them to the world court and resolve that. Let's say on the issue of WTO, China brought issues of WTO to the WTO, and certain things were decided in its favor, certain things are decided against it, but the WTO is not a governing institution, and it doesn't work, and neither does the United Nations, and because power is where it comes down to. So Americans have gotten comfortably used to having their way and deciding that, okay, that's fair, that's not fair, and so on, as an extension of the power that we had. As a result of, in 1945, we created a new world order, the American world order, and we had power, economic and military power. And so we really got to judge others and determine what was fair. I think that, we're not going to be able to resolve that. And if we keep looking at it that way, we may not get what we want. I think we have to look at it realistically.
I think the Biden administration is going to look at building coalitions. And to the extent that a country is perceived as a violator of international law, it will be much easier to build the coalition against the behavior that was a violation of international law. If you look at the ruling under the Convention of the Law of the Sea, which was against China in favor of the Philippines, it put a lot of pressure on China to modify its behavior because it does not want to be perceived as a violator of international law by other countries, especially by the ASEAN countries who were involved. So let's go to some of the cooperative aspects of the relationship. A question on climate and health from Benji Renton.
Hi there, my name is Benji Renton, and I'll be attending CHINA Town Hall in Middlebury, Vermont this year. And my question is, what do you see as the most important area for the US and China to collaborate on science and research? And how can these two superpowers learn from COVID-19 and work together to prevent the next pandemic?
Well, I think that's a great question, and there's tremendous opportunity for cooperation. And, it almost goes back to ping pong diplomacy, but the idea of dealing with climate change, that's a common interest. Not only this pandemic, but global health issues. Just the reestablishing communications and looking for areas of cooperation, I think would go a long way to improving the psychology and demonstrating the win-win potential of those relationships.
Let's go on to society and culture. The committee has been doing a lot of programming on kind of anti-Asian bias in the United States, and you've written extensively about a persistent anti-China bias. Many of these such subtle prejudices have come out in the open in the past year. How pernicious do you think this threat is, and how do you become more empathetic with our cultural differences and yet hold firm to our values?
Again, I'm like a mechanic, I don't have an ideology pertaining to this, I'm just a mechanic. Anger traditionally comes, racism, demonization, across classes, comes during periods of economic distress. And so we see it here in the United States. A number of statistics that could show is that the majority of Republicans and the majority of Democrats actually hate the other side. And so whether that's rich, poor, racial, geographic, all of those prejudices sort of come out, particularly then if you have an opponent. The idea of demonizing the other side in pursuit of good versus evil is the way that normally happens. So we're seeing that happen. Now, what does that mean? I mean, I don't think it's a good thing. I think it's, understanding, having contact with each other. It does a world of good in all of those cases for, the communications, understanding. It helps people understand each other. So, but I don't think what can be done. I think whatever propaganda or views are largely going to be extended by the leadership and the media. So it's quite often the case that when a country has problems, they try to bring it together by finding an enemy on the outside. It would go a long way if President Biden said something nice about China and the Chinese, or the potential of working together. And it would be very nice if President Xi reciprocated and they took some actions along those lines. And then there would be, hopefully a change in the meme in terms of those kinds of things. But it's a symptom of our times, I think.
Yeah, I fully expect the Biden administration to take action against anti-Asian bias, that they will make statements, they'll revise visa policies that relate to really ethnicity, they'll end the Muslim ban, they'll revise visa policy towards Chinese students, they'll revise H-1B policies. I expect that they will do that because they've really, I think the Asian American community came out strongly for President-elect Biden.
At the same time, I expect that'll be the case, and I hope so. At the same time, these deep-seated prejudices about even the scenarios that are underway are, there's a percentage of a population, a large percentage, that nurtures those.
Yeah, and I think we need to, transparency and light is a great disinfectant. And we need to make sure that, that does not shape the formulation of American policy.
The challenge, though, on that is also the media. The media, when put together with politics, it's nice for us to say, but it's difficult to get that kind of light shown on.
I think the media is actually pretty good in this respect. We've seen the media, a Chinese American correspondent working for CBS called out in a White House press conference in what to me was one of the more shocking events over the last 4 years. Let's go to a question from Blake Moss in Kentucky.
My name is Blake Moss, and I'm from Lawrenceburg, Kentucky. My question is, why should people from small towns in Kentucky and other places across the South even care about U.S.-China relations? How does it affect them in their daily lives? Thank you for taking my question.
Good question. It affects you certainly economically. A lot of the goods that you buy at relatively low prices have been produced in China, and so that affects you in that way economically. And of course, their competition has affected jobs, certain types of jobs that have moved to China and that have left the United States. And so that has an effect on you. And then, of course, what happens to our money, the value of our money, its purchasing power, is affected by what happens in the United States and what happens in China. And then, of course, there's this great geopolitical struggle, which might or might not affect you, depending on, what transpires. Hopefully that won't affect you. And so you'll hear about all the struggles in the South China Seas and so on, and maybe that won't matter. But the technologies you use, the cost of the goods that you have to buy, the jobs and so on, are affected by a lot by Chinese-American relations.
Is it fair to conclude, Ray, that you think the greatest enemy of America is itself and the greatest enemy of China is itself?
Yes.
And if so, kind of give us a sense of why and what that means for policies.
Well, because all of this is a natural extension of strength and well-being. And so those 8 measures that I mentioned before are the fundamental underpinnings of strength, the quality and extensiveness of education, the civility of the people, then the development of resource allocation systems, such as our capital markets allocation system, our ability to produce things at competitive rates, our ability to then earn more than we spend, these kinds, and the development of a military that keeps you strong and protects you, all of those things, those fundamental strengths through all history, through all time, have been most important in determining the well-being of countries. And so we rise and decline based on those. So, for example, if we threaten the reserve currency status, let's say, nowadays we're going to have to produce a lot of debt. I go through the calculations. Who will buy that debt? Americans don't have enough capacity to buy that debt, all that debt. They have to sell it to others outside the outside world. Those others already own too much of it, and they're a little bit worried about what the return on that's going to be. Americans, even on bonds, pension funds, endowments, don't think that bonds are going to give them the returns that they need in order to be successful. If you don't buy the bonds and so on, then you're going to have to not buy more than you can afford to buy and all of that. So these basic fundamental underpinnings are what makes a place strong, competitive in the world, make a currency strong and competitive in the world to encounter others in the world. That's just basic.
We're out of time, so let me just close with a question which Chinese media and American media ask me all the time, which is, are you pessimistic or optimistic about the future of U.S.-China relations?
I'm more optimistic than pessimistic. It won't come the exact way that I would want it to come. And I guess it depends, on how long it'll be. But I think if both countries are allowed to evolve, albeit with the risks then it'll be fine. The Thucydides trap example is a good example. In the last 500 years, there were 16 times where a rising power challenged an existing power. In 12 of those times, they had military wars. That would be a disaster. And in 4 of those times, they didn't. If we can look at those times that they didn't and the need for overwhelming and recognize and remember history, remember how terrible those are and how good win-win relationships are, and we can evolve without those kinds of things, which I think is most likely, it's the most sensible thing to do, then we will both evolve, we'll evolve, and we'll evolve together, probably with arguments, but it'll be okay. That is an optimistic scenario for me.
And I very much hope the Biden administration hears that and we can work towards achieving the optimistic scenario. You know, my answer is always, it depends on what the Chinese government does. It depends on what the US government does. And it depends on the people-to-people relationships that are so strong and hopefully will get stronger. Thank you, Ray, for such a wonderful, thoughtful, thought-provoking conversation. And thank you all in the audience for participating in the first night of the National Committee's 2020 China Town Hall Series. We hope you will also join us for the rest of our China Town Hall programming, with our next program coming up on Thursday. More information, including program registration, can be found on our website at ncuscr.org/CTH. Thank you again for joining us and have a wonderful day.
Okay. All right, everyone. Just making sure everything is closed out. I hope everybody can see and hear me now. So thank you everyone for being here. Again, I'm Callie McNutt. For those of you, I know we had quite a few people join a little bit late. I chair the Birmingham Committee on Foreign Relations, and I will not do any housekeeping notes because they ran a little bit late, and I want to make sure that our speaker has as much time as possible to give his remarks and answer questions. So you all have seen our speaker, Kenneth Jarrett's bio, but I will quickly run through the highlights. You should also be able to see him here. So we're thrilled tonight to have Kenneth Jarrett give some remarks on Ray Dalio's talk, and then some remarks in general based on his long career as a diplomat, spending many years in Asia. I think 26 years as a US diplomat, 5 years as the head of the American Chamber of Commerce in Shanghai. Let's see, I don't want to get the title wrong, the Greater China Chairman for APCO Worldwide. And part of his career as a diplomat, he was the Director of Asian Affairs at the White House National Security Council. He now serves as a senior advisor with the Albright Stonebridge Group and is Shanghai based. And one of the great things, well, silver linings, we'll say, of doing these virtual events is that we get to speak with folks like Kenneth, who are a world away. So with that, I will turn it over to you, and we look forward to hearing your remarks. And folks that are listening, you can ask questions. We've already had quite a few come through. I've gotten some by email and text, but keep those coming. And Kenneth?
So thank you very much, Callie. I am very happy to be with all of you, and it is true that the ability to do so is the silver lining of COVID-19. So before getting into my remarks, afterwards, I invite all of the participants to send a note to Callie to say which person has the more interesting bookcases behind them. We're having a bit of a competition between the two of us. So you've already been sort of hit with a lot of commentary. So what I'll do is try to keep my remarks to maybe 15 minutes or so to make sure that there's sufficient time for Q&A. And I'll divide my comments into two sections. Just to offer some thoughts on what Mr. Dalio said, and then to offer some comments with my Shanghai perspective, but focusing primarily on the commercial economic relationship between the United States and China to tap into some of that expertise on my part. So in terms of Mr. Dalio, so he was very upfront about his bias. He's an investor. He doesn't represent the United States. He's not necessarily taking a position on, value systems or what's good for the United States as a country. He's simply looking at global trends. So he's very, he's a big picture person. He's looking at ups and downs and trying to understand how this creates opportunities. But so you might feel, some of you might object to that perspective, but what he himself acknowledged that he's been accused by some as being sort of unpatriotic. And it's certainly true that he believes that it's worth making a bigger bet on China. So in that sense, he is definitely in the category of being a China bull. But what is valuable, I would say, about his commentary is it does challenge us to, to ask the question of how do we think about China? And that's something that I would encourage all of you to do, is something that I do constantly, because I do at times worry that as we discuss China and the United States, there's a tendency to try to put labels on one side, good guys and bad guys, everything is black and white. And what we do need in terms of understanding the direction of this bilateral relationship is a little bit of nuance. There is also a need, as Mr. Dalio underscored, and here I actually would agree with him, that we do have to be practical and realistic. So he definitely is a realist, there's no question about that. And the reason I say this is, many of the aspects about China that have many Americans concerned, because there are some, very unattractive developments in China, whether it's in Xinjiang or actions in Hong Kong or elsewhere that are a focus of a lot of attention, in the United States, around the world. We do as a country, as we try to understand how to grapple with these challenges, ask ourselves, what is our capacity to change these policies or to change sort of Chinese behavior? So this is something that in the case of Mr. Dalio, I would say that he was particularly at the very realistic end of the spectrum. So from his perspective, if the US and China are playing chess and he's looking across the table at China as an opponent, he's simply trying to understand what their next move would be and how he would counter a move that, as opposed to worrying about sort of the values or things that are behind China's actions. So another sort of element of this is, he didn't actually put it in this term, but the question of, how should the US respond? And here, the notion of offense and defense. So, in the last 3 years, the United States has, in many of its policies, have been trying to constrain China, or to contain China, is how many Chinese view this. And I would argue that probably a more effective policy would be for the United States to focus on strengthening its own science and technology developments, to investing more in infrastructure, to doing more in the United States to make the United States continue to be a very attractive model to the rest of the world. Because one trend that we've seen in the last few years is many people in China who for a long time actually looked up to the United States and felt this was a model for China to aspire to, have felt that there are aspects about the United States that they find very puzzling, or that there are aspects where China is actually doing much better. So, I mean, COVID-19 is one example. Many Chinese are puzzled as to why the United States hasn't been able to get the pandemic under control. And it's very easy for them to contrast that with how China has performed. We're in the city of Shanghai with 25 million people, and I've been here most of this year, and you can move freely about and participate in activities. So this is sort of an example here in China of how sort of attitudes toward the United States are changing. But the key part of the dynamic between the two countries that's important to be sensitive to is the changing relative balance of power. So the United States and China are different countries than what they were 40 years ago when we started, this most recent round of getting to know each other again. The United States, simply doesn't have as much influence as before, and China has a tremendous amount of economic power. It's a very confident country, it's frankly, it's sorting out what it wants to do. So I would say that, as we worry about China's future role on the global stage, one point to keep in mind is that in the mind of the Chinese leadership, I would argue that they themselves aren't really clear about what it is they want. And this is what is feeding some of the anxiety around the rest of the world, because there are actions that China has taken that makes the foreign community nervous. And without China actually explaining what it is they're looking for, it's hard for us to calibrate and to decide actually how nervous should we be. Now, is China simply interested in being sort of the main player in the Asia Pacific region? Is that their goal? And in that respect, are they looking to push the United States out of Asia Pacific? Or are they looking to expand their influence across the globe through something like the Belt and Road Initiative? So the many policies that China has, which are ringing alarm bells around the world. And I would say that China hasn't really done a very good job of explaining what is behind these policies. But I would also argue that the main reason for this is I suspect that China actually doesn't know what they're looking for. And this will take a long time for this to develop. So we are in this phase of US-China relations where the relationship is quite untethered, because for a long time, you could argue that the two, in terms of economic activity, we were in separate corners. The US is at the very high end of economic activity and technology, and China was at the low end. So if China was only making toys and apparel, that doesn't actually threaten the United States in terms of national security interests. But now that China is a leading sort of power in AI and lots of high-tech areas, and very decidedly wants to move in that direction, it's encroaching in the area that the US views as its traditional strength. So this is another cause for anxiety. So that's, I guess, just some big picture comments. And let me turn, I guess, to the second part. So in terms of the business and economic relationship, so we're sitting here, so here it's November 11th in China. So this is what's known as Singles Day in China, which is the big sort of online shopping spree. And in Shanghai, they just ended this huge international import exposition. So these are two sort of points in time that underscore why China is still attractive for foreign companies. And as Callie mentioned, for over 5 years, I led the American Chamber of Commerce in Shanghai, which is one of the largest AmChams outside of the United States, with well over 3,000 members. And the American business community is still quite committed to the China market. The fact is, if you look at annual surveys of the AmCham in Shanghai, and Callie has copies of the most recent one, which she can send around to people who are interested, you'll see that the performance of companies is actually quite strong. The vast majority are profitable. In the last survey, which was released in September, 78% were profitable. The majority are enjoying growing revenues. They're still investing into the future, and they do have a long-term commitment to China. At the CIIE that just concluded, so China announced that they signed 72 billion in sales. Of course, this is a political statement, and it's hard to really understand what's behind the 72 billion because these could be deferred for this particular event. But the fact is that China has a lot of consumer buying power, and this is only going to continue to increase because the middle class here is well over 300 million in size and growing quickly, and consumption as a percentage of GDP is still at a very low level. So China is approaching 40%, which is way behind what the United States is. So if you actually do get a consumer society that gets closer to what we see in the United States, that will create opportunities for U.S. companies. And the majority of U.S. companies actually are successful here and believe that there are strong opportunities. And the reason for this is for some key sort of macro trends that are pretty strong. So one is the expansion of the middle class and their buying power. So I've mentioned that. There's still a big process of urbanization that's taking place. So China is now over 50% urban, but the government still hopes that a couple of 100 million people will continue to move into cities. So that creates a lot of economic activity as well. You have infrastructure buildup. I'm sure many of you have seen pictures of the high-speed trains and the fancy airports and things of that sort. Infrastructure development is a particular strength of the Chinese government. They believe in it. They have a lot of money to do it, and now they have tremendous amount of experience. And this continues to move at impressive speeds. And what this means is that it does open up other parts of the country that were not accessible for economic activity. So for many years, much of the economic activity has focused along the coastal regions, and now with infrastructure build out, so this is able to penetrate into the interior and other parts of the country. So you have an aging society as well, that creates opportunities in terms of healthcare. This is an area where US companies are quite competitive and quite bullish. So if you look at the AmCham survey, you'll see that one of the most optimistic industries is actually the healthcare industry. Now here I'm talking about both pharma and medical devices and healthcare services, because China realizes that the traditional way that they took care of aging elderly people in a family, which is they typically have 3 generations living together. This isn't necessarily a model that will stick for the future. So they are looking at assisted living and other options. So there's a lot of actually foreign investment sort of going into these areas. So in terms of, I guess for an Alabama community or Birmingham in particular, as you look at opportunities in China, so first I would say, that there are, yes, there's a lot of politics. So this does create some specific challenges. And for foreign companies in China, they always do face operational and regulatory challenges. So it's not as easy as operating in the United States, but there are lots of companies that have experience at operating in China, and you can come here and be successful. It's also not too late to be here. So there's still new companies that are coming into this market. Most of the larger American multinationals have been here for some time, but whether you're a company that's looking, whether you're looking to export or you're looking to actually come here and manufacture, to do something to satisfy the China market, that's largely what most US companies are doing here in China. They have their operations here and their main focus is on the China market. Or there's a reverse flow as well. So Alabama is already the host to a couple of big Chinese investments. You have the Golden Dragon sort of copper tubing plant, which is the most modern copper tubing plant in the world. And this is one that is an example of how sort of outbound Chinese investment can also sort of help your communities. This is something that investment flow is, it's been drying up in the last couple of years, but it's something that perhaps at some point in the future will resume again. Other industries that are attractive here in the area of services, this is a particular American strength. And in fact, the US enjoys a very substantial surplus in services. Now, unfortunately, services have been a big casualty of COVID-19 because the main service exports from the US to China are tourism and education. And I believe that that's true for Alabama as well. So if you look at your listing of services exports, those are number 1 and number 2. So at the moment, I don't see a swift revival of that, but if we are actually moving into a period where a vaccine will be available and international travel will resume, and it's possible for Chinese students to once again go to the United States, you'll see a pickup in services. And that actually has potential benefits because as you have this flow of people, that also can lead to investment in things, because particularly for Chinese investors, often their interest in a particular region is a result of some personal connection that they might have with the geography. So whether they went to school, in some place in Alabama and develop friendships there, that actually can lead business people to come back, and to invest in sort of Alabama. I think so those are, I guess, a few, thoughts for me. I'm not actually here to make a sales pitch, for you to come to China. But I guess I'm looking to serve as a counterpoint, because as I read the U.S. press on China, sometimes I leave with the impression that the media believes that it's impossible, for a U.S. company to come to China and be successful. So at the risk of being viewed as a panda hugger, or maybe somebody in the Ray Dalio camp of how they view the world, I may be exaggerating this a little bit just to really make the point, which is that even if you hear a lot of disaster stories about operating in China, that in fact the vast majority of companies do feel that this is an attractive market, it's certainly a strategic market. So they don't feel that they have the option of leaving China. And for many big multinationals, and there's a difference between the perspective of a multinational versus a small or medium-sized enterprise, for sure. But for the bigger multinationals, there's no question that for many of them, China is now their second largest market. And it's particularly in this period when the Chinese economy is enjoying positive growth and the rest of the world is still mired in negative growth. The strategic importance of that growth in China is greater than ever before. So let me sort of end here and do my best to tackle whatever questions that come my way.
Wonderful. Thank you so much. That raised a lot of questions for me. So thank you very much, Ken. I think we'll start with the first question that was asked by John Wetzel, who I think is not on the call anymore, but it's a good question. So he asked, why are companies like, I guess, Caterpillar and John Deere not making sure the American public understand Made in China 2025?
Right. So just in case people on this call don't understand Made in China 2025, just to give you a quick snapshot of what that is. So this is so China believes in planning, economic planning and long-term economic planning. And they have various industrial policies where they will identify what they view as strategic industries, and they will leverage the resources of the state. Whether it's actually, it could be scientific and technological, it could be financial, that's a very important resource. And they will try to push the development of particular industries. So Made in China 2025, which came out probably 5 or 6 years ago. So this was an industrial policy that identified 10 strategic industries, and then it set targets for what China, how they hope to drive these industries. And actually, one of the industries in that list is modern agricultural equipment, which is, I guess, why the question about cat and deer. So this actually does raise an interesting question about how foreign companies deal with these types of political questions in China. Because for them, I mean, you do have to appreciate that they do need to navigate a tricky path. Because on the one hand, they have ongoing businesses in China. In the case of both cat and deer, they actually have quite successful businesses here. So and perhaps as they look at Made in China 25, they might be alarmed at this because they see China is act there very aggressively looking to develop replacements for cat and deer on the world stage. Yet, if these two companies were to openly be sharply critical of Made in China 2025, that this, they know, will offend the Chinese government, and this could create challenges for them in their existing business. So every corporate has to somehow balance, how do they do this? So typically they work through chambers. So when I was leading AmCham Shanghai, so the chambers would put out documents and we would do sort of the advocacy or the lobbying in Washington, DC to try to sensitize people about the risks that these policies would play. Or we would go up to Beijing and meet with the central government and underscore how these policies, how they might be unfair or disadvantage foreign players. And that allows the corporate members to at least get out the information about something that might alarm them, but not to do so directly in their name. So that helps them to protect their ongoing business interests, because they don't want to jeopardize that. So it is a tricky position for them to be in. In terms of informing the American people about it, so I would say that if you were, twice a year, for 5 years, I went to Washington twice a year in what we call the Washington, DC door knock, where we would meet with members of the administration and spend a lot of time up on the Hill meeting with members of Congress. And I would say that at the early period of Made in China 2025, if you came in and you mentioned this, people's eyes would sort of glaze over and nobody would know what you're talking about. But after a couple of years, actually Made in China 2025 became very well known on the Hill. And at least for those policymakers, they're quite aware of what this represents. Whether the general public in the United States has an appetite for this, no, I'm not so sure. For you as a Committee on Foreign Relations, you're quite interested in this, but the general public may not be concerned about the details of the plan. They would be concerned about the bigger question of what is the role of industrial policy in China, and is it unfair, and does it harm U.S. companies? And that's something where, for cat or deer or any big multinational, they typically would work in Washington on it and be somewhat quiet about it, again, because they don't want to jeopardize their business activity in China.
Great. Another question we got via email. Here we go. With the national debt and deficits at levels possibly indicating insolvency, the dollar on shakier ground as the global currency, as well as China's expansiveness, can the US remain the global hegemon?
So, well, I guess the short answer, I mean, this, of course, Mr. Dalio referred to this, and I think, his view is pretty clear as well. So for me, I'll answer in a slightly different way. So I would say that no, the U.S. will, at some point in the future, the U.S. will no longer be able to be the global hegemon. But I would argue that the world is moving in a direction in which there probably won't be a global hegemon. So you might have seen, the notion that we're moving into the direction of a multipolar world. So this as a vision of the future, this has been out there for a number of years, and I believe that this is true. So the U.S. May or may not have a peer competitor, that might be China. Even today, the U.S. definitely has unrivaled military power. So that is a particular source of strength for the United States. And actually, I don't see that changing anytime soon. So I think for a couple of decades, that the U.S. will be unrivaled in terms of its military power. But then there's a question of the U.S.'s financial ability to maintain that military primacy, and whether that's actually in the best interest of the United States, because there are many sources of national strength, and maybe some of that money actually needs to be redirected back into U.S. infrastructure and other things that also can help to maintain the U.S.'s preeminence, but in a slightly different way. Whether or not China is going to become a global hegemon, so I would say the answer also is no. Now this goes back to, I guess, what I said at the beginning, which was more of a question. So what is China's vision for itself? And I'm saying that China actually doesn't know, and so of course I don't know either for sure. What China, how it wants to look. As a undergraduate and a graduate student, so Chinese history is my academic background, and I've been coming in and out of China since 1979. So I'm in that sort of that category, I guess, of old China hands. But for China, they want to be viewed as a global leader, but they don't actually want to lead. So it's an important distinction, where China wants to have the respect of the world and to be treated like a global leader, but they're not actually looking to be out there defining and shaping, or they don't want the responsibility in many ways. So this is the central dilemma that China faces about how it defines its global role. They do want to be the leader in those areas, again, in its backwaters. So this is why we have these conflicts over the South China Seas and other parts of Asia. But I don't believe that China is interested in shaping Africa or interested in shaping the Middle East or Latin America for that matter. So in that sense, so China is not going to be the global hegemon. The United States, at some point in time, won't have the capacity to be so either. But then we will sort of break up into, the EU will be one center, China will be one, and the US maybe will be stronger than all of the others, but not in the position to completely dominate.
Okay, so you don't think that, you mentioned you don't think that China is making a play for Africa, for example, or the Middle East, because I know they're investing so much that, a lot of people do believe that they have very serious motives in those regions.
Well, they definitely, so if you look at, I guess, the trends of China's activity in Africa, so much of their original outbound investment. So if you were to go back, 20, 30 years ago and look at where China was investing, they're trying to lock up natural resources. So China is, it's a big economic entity, growing very quickly. So it's natural for them to try to capture very stable supplies. And they have, I guess their approach to this would be slightly different from an American approach, which would be, as long as markets are open, then you just are able to acquire what you need through the market. China doesn't have the same faith in the market, so their approach has been to try to buy up the supply. So that's, for Africa or, Australia or other parts of the world where they invested in the early period, that's what their focus was. Now from the Belt and Road Initiative, it's trying to use, it's the development of infrastructure. So, the different explanations for what's behind the Belt and Road Initiative. Now, some see it as an energy play because China was originally focused on Central Asia, and definitely China is a big consumer of energy, so that makes perfect sense. China also has tremendous excess capacity, steel, cement, all these things that they don't know what to do with. And they have already built out much of the infrastructure here. So it made sense then to extend that to other parts of the world. Whether or not they're looking to build up consumer markets in those places that they can tap into, it's hard to say. Now, it's true that China is Africa's largest economic partner now. So it's eclipsed Europe or the United States by a lot. But I don't actually see China trying to exercise political influence in a big way in Africa. So that's where I would make the distinction, whether or not I'm being naive. And so normally, political influence does follow economic power, for sure. But I don't actually see China looking to shape African politics. They're looking to be there to get the commercial benefits, and whether at what point in time sort of might they cross the line into seeing a very tight relationship between politics and economics. I don't see that many indicators of that yet. It doesn't mean it won't happen, but I don't see the signs of that at this stage.
Okay. Great. And that a couple more questions kind of are in that realm, so I don't know if we need to delve into them, but one question was, and you talked about the multipolar world, which is a bit of an answer to this, but what would happen were the US to do what Britain did in 1945 and hand off the global police, the world's policemen to an entity or a country like China? So maybe if you could just speak to that, because it sounds like you mentioned they don't want that responsibility, but if they end up having that responsibility, how would that look?
I guess you're forcing me to speculate on something that I don't think will happen for two reasons. So I don't think the U.S. isn't going to want to hand it over to China, and then China won't accept it, even if the U.S. does. I guess what's a more likely scenario is, at some point in the future, so there might be a strengthening of China's sense of possessiveness about certain parts of the world, starting with, the Southeast Asian region or Asia more generally. And maybe we will see more aggressive efforts by China to kind of squeeze out the US security umbrella that's existed. And in that sense, if there's some problem in Asia, China might feel that they're the ones who are going, it'll be the Chinese 7th Fleet that comes to the rescue, as opposed to the US 7th Fleet, which is how the region has been conditioned, for many, many years. So it's not to rule that out as a possibility. So I would say that that's perhaps the more likely scenario. But here too, it's hard to imagine the U.S. actually getting to the position where they feel that they want to do that, because even at some point in time, the size of the Chinese economy will eclipse that of the United States. That's of course an aggregate number. The per capita GDP will still be way behind the United States, but China will have the world's largest economy. And with that will flow a lot of pressures on the government to take steps that will help to protect that economic growth. So you could see China being more interested in playing a kind of a policeman role. But they don't actually, they don't have the experience. In the last 10 years or so, it's been interesting to see China as they've struggled with issues that the United States has had to grapple with for many years. So when the Middle East was facing periods of chaos and there were a lot of Chinese workers in Libya. So they actually had to put in place sort of this, an air rescue to bring about 30,000 Chinese out of Libya, which was quite hard for them to do. They just don't have this experience of going in and rescuing their citizens. And you could see, even now in COVID-19, the Chinese government has been criticized a lot by its citizens for not doing more to help those Chinese citizens who were in the United States who were trying to come back to the United States, coming back to China. When civil aviation sort of came to an end. So there are many Chinese who, in a sense, were trapped in the United States and wanted to come home. But the Chinese government did not put in place that many flights. If you had an opposite situation, I suspect that the U.S. government would have been much more aggressive in terms of creating flights to bring its citizens back. So that's not sort of a way that China is used to behaving yet.
last thing, because we touched on military, but this is a more overarching question. Our last question, well, the question on here is, are there any aspects of China's military that you deem superior to the US military?
Well, there's some missiles. So for China's approach, so they're looking to, I guess, deny access. So they recognize, or asymmetrical warfare is how it's viewed. So, for them, you'd have to get back to, so what are their strategic and military objectives? So the first, what's the most important issue for China in terms of a military point of view is Taiwan, and what happens with Taiwan. And, if China were to decide to take military action against Taiwan, would they have the ability to do so? So they realize that if they have to go head to head with the United States in a full-on military clash, that they're not likely to win that fight. So their focus has been to try to deny access to U.S. military assets. So they do this through, they have a lot of submarines, a big focus on submarine development. They develop these hypersonic or aircraft carrier killer missiles, which apparently are quite effective. So this would definitely give the U.S. military a pause before they were to decide to enter an area of conflict. I'm sure they have plans for cyber, and so they're trying to leverage, I guess, all of their, these asymmetrical capabilities. Now, in terms of actual fighting experience, of course, the Chinese haven't been tested in a long time. So in that sense, there's definitely a risk for them. They follow, though, developments in warfare around the world. They've learned a lot from what the U.S. has experienced, in the Middle East. And, it would be a mistake to underestimate their technological developments. So I would say, and, to get back to the question, so definitely, for missile development, so I don't know much about their cyber capabilities. That would be, a particular area of focus. There's a lot of Chinese hacking and development of AI and quantum computing. These are sort of big strengths of China. So these are ways that I think that they would try to find advantages.
Okay, and we're getting close to time, but I wanted to bring it back a little bit local for us, those of us in Birmingham and in Alabama. You mentioned kind of an up and coming opportunity, which is the retirement homes and healthcare and that. Are there any other emerging sectors and specific opportunities that you are looking to or advising folks over in the US to look into?
So there's still, so I would say, in terms of, also in an Alabama or Birmingham context, the auto industry, of course, is it's a big pillar industry in China. The industry here, it's gone through a couple of tough years, where sales have, had dropped, but the sale of auto vehicles here, both passenger and trucks, it's the largest in the world. And if you take GM, for example, they sell more cars in China than they do in the United States. So this is an area that also has at least in particularly traditional vehicles, it's not caught in the crosshairs of technology conflict, between the US and China. It's hard to say if NEVs, new energy vehicles, or autonomous driving, because these both have, technology aspects. So these potentially could get politicized and there could be complications. But, the more traditional automobile industry, definitely, this would be something that, will continue to develop here. So that would be one. Traditional consumer products. This is something where the American brand, the foreign brands are still quite attractive. Starbucks, has more shops in Shanghai than any city in the world. So they have, I think there's 700 Starbucks sort of in Shanghai alone. So that's more than any city, even more than in New York City. Nike, is very popular here. So, whether it's a Gap. So you have all of these, the power of US brands. So that's another, I would say, you still have traditional industries. So chemical industry, this is a pillar industry. China's economy has a long ways to go. This is both specialty chemicals as well as sort of, the bigger chemical companies. These companies all actually tend to do quite well. They're supplying to some of these other industries. So that would be another one to look at. We mentioned, healthcare. Normally I would say, I went through in education and tourism. So education, is something that Chinese families spend a lot of money on. It's maybe hard to imagine. So if you're a parent if you have a child, that child is spending all Saturday and Sunday being taken around Shanghai to this class or that class. So parents invest a huge amount of money in education. So if there are ways for those of you sort of in Alabama to think about education where you might have particular strengths, that's something definitely to look at. There's a lot of online education, that takes place. And of course, tourism. This is something that China is the number one source of international tourism in normal times. And they're also the biggest spenders. So that's something that would be strong. So, financial services, also a particular area of strength. For the financial industry, it's been hard for them. So their market share is small. I mean, they are profitable, but it's a heavily regulated area. And even though Mr. Dalio did, he mentioned the opening in the financial industry, which is true. China is taking steps to open, but they definitely have been dragging their heels to do this. So they haven't rushed to open the financial industry. And now, then they're doing so only when they dominate most of the areas. So, the foreign financial industry, is here, and they definitely are eyeing the China market in a big way, and more people are coming. So, for example, sort of Vanguard recently has ramped up its activities in China to look at individual investors. So there are these types of opportunities, but they all recognize that their slice of the pie is going to be relatively small, and they're banking on the fact that it's the big pie and it's an expanding pie. So they might only have 3 or 4%, but they actually can still figure out a way to make money out of that 3 or 4%. I mean, they would have preferred that they had 30 or 40%, but that's not something that seems to be in the cards.
Gotcha. We're running up on time, so I think if there were any questions that people have been wanting to ask or questions that you'd like to answer, Kenneth, I'll let you have the last word, and just wrap us up and tell us what we should be looking for.
Well, I guess, so I'm sure that there are questions we didn't get to. So Callie, I mean, you can send them on to me and I can do my best to I guess, send you some kind of an answer, or if people want to send me a note, you can explain sort of how to do that. Maybe, I mean, to wrap up.
There are questions about human rights, but I think if we delve into human rights, we might be here for a while. But yeah. I mean, I guess the one thing I would ask is, speaking about what China's motives are when they go to abroad or they're investing in Africa and whatnot. And of course, the US, when we create relationships and manage our international relationships, we always have to remember our values and, focus on human rights and democracy and all these sorts of things, whereas the Chinese are less encumbered by that. But, and Dalio kind of talked a little bit about China would see the US speaking about the Uyghurs, the ethnic Muslims in China, as, not our business. I'd just be curious to know your thoughts on that whole situation.
Yeah, so I would have, a slightly different point of view. So I'd have to I guess, explain my bias or a point about my background. So in the 90s, when I was at the embassy in Beijing, so actually I was in the section that handled human rights. So for many years, I helped to write the annual human rights report that the United States puts out sort of on China and other countries around the world. So it's something that I actually have been, I worked at the consulate in Chengdu in Southwest China and made many trips up to Tibet over that 2-year period. So whether it's religion or ethnic groups or the treatment of dissidents or lawyers or other activists, this is something that I have sort of followed for many years. So there's definitely, there is a role of the international. So number one, as much as possible, it needs to be put in an international context. So it's hard. I mean, the US maybe is in a particular position to serve as an example to the world, but our ability to do that, does flow from how we look to the rest of the world. But for the United States, as much as possible, concerns about the human rights situation in China should be taken out of, let's say, just that the United States doesn't like this, is something that's linked to, universal values, or that you're violating the UN Charter or the International Covenant on Human Rights, or in this kind of international context, because that actually will have more impact on China. And the US should put pressure on China. There's no question about it. I would say the only, so here I would, I guess, adhere to a little bit of the, I guess, the realistic tenet of Mr. Dalio, where we also have to accept that we will have limited capacity to move China. And that's the fact of life. So China and some things are just going to move at their own pace, and we can try to accelerate that, but we can't actually dictate to China. So we just have to be smart about how we do it. So there might be cases in which we decide that certain behavior is so reprehensible and we don't want to have anything to do with you. So that could be one response, and it could be limited to a particular area. Or there could be something where we're trying to push China in that direction, and we accept a glass that's half full or a little bit less than we'd want to. But there are other areas, we have other items on the agenda. So whether or not you were to say that the human rights agenda is going to overwhelm everything that the US has at stake with China, for me, I would view that as sort of going a little bit too far. But definitely there are people who would feel that that's the most important concern, and that's a very legitimate point of view. So for me, and companies face this all the time. So the many companies that I'm aware of that are looking very closely at their activities in Xinjiang. There's some companies who have actually ended or restricted certain activities. They're all looking at how they talk about these issues, and they're quite sensitive to what's going on there, and what they, as a corporation, they do want to be sort of a good corporate citizen in terms of what's the right thing to do. And so this is a challenge for companies, but it's not so easy to sort out the path. So perhaps as a final statement, I just say that we do have, to the extent that we do need to try to put ourselves in China's shoes and to understand what's driving them. Because if we want to be effective, it's not to be sympathetic, it's to maybe have empathy is about as far as I would go. Meaning that we simply have to understand what's driving China, where they would define the red lines, and from that to decide where the US has the potential and the opportunity to improve relations, and to encourage China to slightly move in a different direction if we feel that we don't like the direction that they're moving. But also to just, with some humility, to understand that at the end of the day, they're going to make their own decisions about this, and then we're just going to have to sort of react based on that reality.
Gotcha. Wonderful. Well, thank you so much, Ken. That was a great talk, and we hope to have you back to speak to our group. And if we have follow-up, we have a few questions we didn't get to, and I'll be in touch with you about that. But thank you so much for being with us. And then for those of you on the call, we do have an event upcoming this Thursday focused on press freedom in Eurasia with Jamie Fly from the German Marshall Fund. I hope you will join us at noon. And with that, I will let you go. But thank you so much. Have a great day in Shanghai. Maybe we can have a Birmingham delegation visit once we have a COVID vaccine.
Right. Well, we're getting closer to that. So that's
right, exactly. Thank you so much.
Okay, thank you.
Bye, everyone.
All right.